On this episode of the AAF Exchange, the economy and the Fed, hugging face continues, and new tariffs, same problem. Joining us to break this all down are AAF President Douglas Holtz-Eakin and Director of Trade Policy Jacob Jensen. Doug, thanks for joining us.
It is always a pleasure. And it turns out this is the 196th such pleasure.
The 196th such pleasure. Yeah, I had to redo the intro there because I keep seeing this hugging face thing, and after Angela the other day kept calling it the wrong thing, I just had a chuckle in my head.
Yes. But we will get to that.
But yes, before we do get into all that, what's been on your mind?
Well, actually, a remarkable thing happened. The Inflation Reduction Act under the Biden administration contained a bunch of prescription drug provisions, but one of them was a redesign of the Part D prescription drug benefit that really put on the insurance plans the liability for a lot of the really expensive high-cost patients. And if they're going to have to pay out a lot of costs, then they're going to have to charge higher premiums. And the Biden guys realized this right before the elections and invented a premium stabilization demonstration program, which was just throwing about $9 billion in cash at the plans to keep the premiums from going up. And I've written on this, and I predicted that we'd come up to the end of this temporary demonstration project, and Congress would do what it always does and extend it, or the Trump administration would do it. They'd extend it. They didn't.
Yeah.
Remarkably enough, they called the thing off. So that means that 2027 premiums will go up. I don't know how much, but noticeably. And that they are willing to have that be announced on October 15th, just prior to the election.
Yeah.
So all of this surprises me. And I'm going to watch how it plays out.
Mm-hmm. And so from a policy perspective, what was...
I thought the redesign was actually a good element of the Inflation Reduction Act.
Yeah.
I mean, the issue was they went from the old design, which I didn't love very much, to the new one too abruptly. They should have phased it in. They'd been fine. This stabilization demonstration didn't solve that problem because it didn't phase the design in. It just sort of papered it over with cash.
Yeah.
So we're going to see it.
Interesting. So, and this was your dish this morning for Thursday morning. Yeah, today's Thursday, right?
Did I talk about? I don't know.
You talked about something in the reflection.
I usually talk about stuff.
Anyways, I think it is, and we'll obviously include it. But let's turn to the economy. This week, we got the latest read on inflation just this morning, and the GDP report.
Yep.
What did we learn?
This is June inflation, so this is sort of relatively dated. We knew the CPI already for June. This is the personal consumption expenditure price index, and it looks the same as the CPI. Top line was negative for the month. That was the big drop in energy prices when the Iran war ended for the first time, or maybe the second time or the third. I've lost track. But we had this big decline. And so that wasn't a surprise. The core moderated, came in for the month at just 0.1, not a higher number as expected. So year over year, it went from 3.4 to 3.3. All that sounds good. The trouble is, as with the CPI, the real decline in core inflation was in shelter. Mm-hmm. And I can't for the life of me understand why suddenly apartments and houses got much lower inflation in June. I mean, they've been averaging in the 4s and it went to 1.7. I mean, so I need more data before I'm convinced that this is real.
Yeah, so I mean, is this like people just aren't moving? Leases aren't going up?
This is me saying I have no clue.
Interesting.
but it's a development I want to keep my eye on. The GDP numbers were comparably interesting because the top line's 1.5% growth, which sounds pretty bad. But the household sector came back with a vengeance. Personal consumption expenditures grew at 3.2%. In real terms. We've been having the big investment boom driven by the AI infrastructure. So the reason that it was such a weak report was we had a big negative swing in inventories and a big surge in imports. Mm-hmm. The surge in imports is just, we've seen this movie before. We saw it last year when everyone knew the Liberation Day tariffs were coming.
Right.
They imported in advance of them. Same thing was happening here. They got them all in before the 301s showed up. So
interesting.
That's a sort of deceiving report in my view.
Yeah. Well, and Jacob will also be on later in the
explain all those tariffs
to explain all that.
Better him than me.
Yesterday, on Wednesday, the Fed also announced rates will be unchanged. Walk us through that decision.
The decision was to keep the rates where they are, 3.5 to 3 3/4. It was a 9-3 vote, 3 dissents. This was a very traditional dissent. This isn't the kinds of things we saw over the past year because the dissents were all regional Fed presidents, and all of the Board of Governors voted with the chairman. And that's more typically how things go. Like if they're dissents through the regional banks, they're not appointed in the same way. So I think that was sort of as expected. There is a question of whether they've got the rates in the right place. I never thought they should cut 50 basis points when they did, so I wouldn't be upset to see rates higher. But the real furor surrounds the fact that in the aftermath of the decision, when the new chairman, Warsh, did his press conference, he essentially said, we're committed to fighting inflation. But when asked questions like, would you raise in the future, he'd say, we're not doing forward guidance. And so he said nothing. Mm-hmm. We saw a big sell-off in the stock market. We saw long rates bounce up a lot. The 30-year went up 15 basis points in the immediate aftermath. So as of today, there's a lot of hand-wringing over what's going on.
Right.
I think it's kind of premature. This is a work in progress. We'll see.
Yeah, so Chairman Kevin Warsh has been on the job for 2 rate decisions now.
Yeah.
What do you make of his leadership so far?
I'm not there. The leadership is largely internal. He has said that the Fed is going to communicate less with markets. He's communicating less.
Yeah.
There's no question about it. And you're hearing a lot of the chattering class say, oh, I hate this. This is a terrible thing. He needs to do more. As I say, I think the jury's out. It looks, a cheap characterization is like he's trying to reinvent the Greenspan Fed, where, until 1994, they didn't even release a statement.
Yeah.
So, they met, and then you stared at the bond market, and at 3 o'clock, whatever trades were made told you what they were up to. Mm-hmm. I don't think he's literally going back to that. I think that we departed that for a reason. But he's going back to a place where there is less chatter coming out of the Fed, that there's more action is how we convey our intent. And I don't think that's a mistake. I think we'll see how it goes.
It did seem a little bit like the pendulum had swung a little far in the direction of too much information.
So that's the key word, information. Like we got a lot of stuff. We got survey economic projections. We got every member of the board talking all the time, and people were more confused than anything else.
Right.
So it wasn't information. It was noise.
Right.
So we need more signal, less noise. How you do that is the trick.
And I think, as you know, as an economist, there's a lot of different ways to look at numbers, and you can cherry pick. You can say, well, look at these numbers, and leave that for the talking heads and the policy.
Are you accusing economists of cherry picking the data?
Not all
on
of
the
them.
record here, Kyle.
Not all. Economists.
We're going to have the American Economic Association picketing our offices. Stop it.
Well, you can see which one of us is an economist and which one is a communications professional. Looking ahead to the rest of the year, what key economic indicators should businesses and policymakers watch over the next?
I think that the focus in the monthly employment report should be on the growth in average hourly earnings, and the other number that matters is you pick your inflation measure, because it's the horse race there that's going to determine whether people are totally angry or satisfied. If real wages resume their growth, I think everyone is going to be able to breathe easier. We got a really strong household spending report in the GDP, but if you, again, look through the monthly personal income, the way this is being accomplished is the saving rate keeps dropping. So we need better wage growth. We got people in jobs. They need to get raises. That's the key.
Yeah, it seems like...
Not you, though.
Oh, are we going to do my negotiation live on air? No. Yeah, it does seem like, every month the jobs report comes out and it's like, stagnant wages, and that, keeping up with inflation, that's not an easy... It's not a recipe for success.
I've said this to you before. I mean, in 2021 and 2022, unemployment was low. mean, people were going to work every day, but real wages fell every month.
Yeah.
So people went to work for 2 years. It got further and behind every time. And they were angry.
Yeah.
And that was that. And they stayed angry.
And we saw
and we run the risk of seeing the same movie right now.
Mm-hmm. Yeah, I mean we've already seen credit card balances go up. So that's not sustainable.
Right. Absolutely. So that's what I would be looking for.
All right, let's shift to AI and the Hugging Face incident, and I have to laugh at the name of it, but it's not a laugh. It's it's not.
So it's named after the emoji.
Yeah,
I did actually try to figure out where this came from.
Oh, really?
Yes.
That's an emoji thing? Okay, well.
Yes.
So for listeners who may have not followed the story, what happened and why is this a problem? Still a problem.
So again, I won't present myself as an AI expert, but this is sort of roughly what went on. So the OpenAI has these two models, one of which has not yet been released, and it basically locks them in a room and gives them a puzzle to solve. And the room is called a sandbox, but it's supposed to be a contained area out of which the AI cannot travel. And the AIs figure out how to break out, so they bust the lock, and they start roaming the internet looking for a way to solve the puzzle they've been given. And Hugging Face has a big inventory of things, and they realize that's probably where the solution is going to be, or at least the way to solve it. So they go and they break into Hugging Face and they find what they want. And in the initial reports, they then were headed back to the locked room to solve the puzzle, but it was at that point they got detected and intercepted. We now know that they in fact wandered the internet for 4 days and broke into another company called Modal Labs and may have breached a customer account, a customer of Modal Labs. And so they were less on task, more inquisitive, and more intrusive than we previously thought.
Yeah.
I find this very troubling.
Yeah.
I don't know about everybody, but this is the kind of thing that makes you think, okay, for ChatGPT, who cares? I don't view that as a great threat. For these frontier models, the very cutting edge, they're very powerful and they're developing quickly. I think we ought to be having an adult conversation across the aisle in Congress about how we want to handle the regulation and doing it statutorily. Nothing against the Trump guys. They're smart and they probably have their own take on it, but we need to have a public education about what these are and not just like a black box that we're afraid of or favor. I mean, we need something. So that's where we are, and it's a wake-up call, in my view.
Yeah, well, I want to talk more about, what the role Congress should play, but first, this is Anthropic CEO even came out, and I think Open CEO came out and said, we need to pause on these.
Not quite. We need to slow down. Yes.
Not pause, slow.
And it wasn't just them. It was 1,700 AI engineers signed an open letter saying, we might want to slow the pace of the development to make sure that we have everything in place. The analogy being, we invent the car in 1909 and the next year suddenly we have a Porsche and we don't have an interstate highway system yet. We don't have we're not ready to have that advanced model.
Right. So, and I mean, AI, this is part of the problem with talking about AI is it's
a lot of different things.
We paint in broad strokes, like the automatic spell check on your phone or, automatically putting something on your calendar or using ChatGPT. That's not the issue here. It's these frontier models that are the big problems.
So I don't know if you remember, but in the old days with Microsoft Windows, they had that little paperclip guy.
Clippy? I hate
most
that guy.
Annoying. Yes, him. He was. That's like the first AI.
Yeah.
This stuff has been around for a long time. It's been used in ways that are absolutely unobjectionable, in which we all favor, but the frontier models are the issue.
Yeah, I mean, I use AI sometimes when I'm like, this sentence doesn't make sense, so I just throw it in there and I'm like, make this sound better, and then it spits it back out.
Not something you should have reported to your boss.
It's for small things. But I mean, I also use it, I use it to sift through data quicker.
Right.
Like when I'm doing those monthly and weekly
reports. These are good research tools.
We just did the Peterson reports, and it made my life infinitely better when I just told it, go find these products for me in a massive Excel document, so I don't have to sit there with my eyes and scratching and, ready to throw my computer through the window. So they're helpful tools, but again, some of these frontier models are part of the issues. So anyways, so with that being said, all those concerns, and you started alluding to it, what role should Congress play? Are there targeted steps that you think to improve security without undermining the innovation?
I'm not enough of an expert to pretend I know what the steps are, but what I think should be happening is there should be legislation so that people can debate the legislation, which means they would have to learn about the legislation, which means they'd have to learn about the AIs, and we would more broadly have a public understanding of what's going on. Right now, this is a cult. There are a few people who understand it and work on it. In a country with 310 million people, we need a broader awareness before we can start saying too fast, too slow. We don't even know what that means right now. Mm-hmm. And so I think people are afraid of the unknown, and sort of demystifying is the key.
Yeah, I think you being, you're a competent policy person, and you don't have a complete understanding of it. I think that says a lot. I mean, yeah, an education to the general public is probably the first step in any of this. Yeah. At the same time, because you don't want to have these broad regulations that stifle the innovation.
No, you don't. And I also get a little bit worried about that. We have to do this just to beat China. No, we don't have to beat China.
Yeah.
We have to have the most effective and productive AI sector for us. Mm-hmm. I mean, that's what I care about.
I mean, it's like the space race all over again.
Yeah.
You don't have to be first, you just have to be best.
And we got the moon rocks, and that got us... Never mind.
Well, on that note, Doug, thanks for joining us.
Thank you.
Jacob, welcome back.
Great to be back. Thanks for having me.
So it's been a busy couple of weeks yet again for you.
Very busy.
I should just stop saying that every time you come on, because I feel like it's just been a busy 2 years for you.
Just always true, yeah.
Yeah. Always something going on in the trade area. So the latest being last week, the Trump administration's across the board 10% tariffs, known as Section 122, expired. What does this mean?
Yeah, so these are the initial replacement tariffs when IEEPA was struck down by the Supreme Court. So people might remember IEEPA was the set of tariffs put in place on Liberation Day, the infamous Liberation Day. And so these 122s lasted only 150 days, and so that we all knew that they were going to expire on July 24th. So now what this means is the administration has to rely on new tariff authorities to create their tariff regime.
Yeah, so speaking of that, last week the administration began its latest tariff regime, this time using a new authority, Section 301. What do we need to know about those?
Yeah, so this is now the third tariff regime, and it might be the final tariff regime. We'll have to see. And 301 has more legal and historic precedents, and so it's meant to combat unfair trade practices performed by other countries. So these specific ones that were imposed on Friday are in regards to forced labor practices abroad. So it's meant to, if other countries are importing products that are made with forced labor, then these are meant to address those concerns. So we'll have to see about that. But they range from anywhere from 10 to 12.5% on 86 different countries, which covers about 99% of all U.S. imports. So it effectively replaces the 122 regime.
Mm-hmm. Yeah, so, I mean, under forced labor, I mean, basically it's a broad definition of all of that. So you could, anything that comes from, say, China with, some of the human rights abuses, you could say that's forced labor.
Right.
And, so there's your 10% tariff.
Exactly. And there's a lot of pushback from these countries saying that they have mechanisms in place already to combat the concerns from the U.S.
Yeah. I hope this is it seems like we've got the trilogy going on here, as you said, the third and final one. So maybe this is the way that they'll do it. But anyways, they also did. The administration also announced new tariffs on imports from Canada using another authority. Explain what these tariffs are and why they matter.
Yeah, so this is another authority. It's known as Section 338. It goes all the way back to the 1930s when it was first introduced. It has never been used to impose tariffs before, so it's kind of in legal murky waters.
Yeah.
But it's meant to go into effect on August 19th. It's a 50% tariff rate on 3 main Canadian categories, so alcoholic beverages, motor vehicles, and dairy products. Although, if you look really closely at the HTS codes, there's some random products thrown in like wigs and Christmas decorations. So it's a very interesting tariff proposal here.
Interesting. And a lot of these come with a lot of exemptions, or is that still true?
Yeah, especially for the 301 regime, circling back to that, there's a lot more exemptions than the previous 122 regime, and that regime had more exemptions than IEPA. So they've been narrowing down their selected import categories.
I don't know how you keep all these numbers straight, because I have a hard enough time with all the ABC agencies in this town, like all the 301s and 122s and etc. Like, it just seems like there's a new tariff model section every week.
Luckily, the administration's kind of getting down to the last few tariff authorities that they have available now.
So there'll be no new numbers popping up, hopefully, in the near future.
I guess we'll have to see.
All right, Jacob, thanks for coming on.
Thanks.